Alright, let's check out the Kadena chart. So, one of you asked me to cover this, so I'll give you my opinion on this. Now, this is probably going to be a very, very quick video because this is very black and white what is happening in my opinion. This chart does look pretty bearish to me, at least in the short term. So, if I was to get bullish on this, I would need to see a very, very strong break above this 786 Fibonacci. And let me explain why I personally think this is bearish. Number one, the market cap is 1 billion, so I don't believe the risk-adjusted returns are that good for entering this. I don't think this is going to make you rich. I don't think you're going to get a 10x return on this. And also the fully diluted market cap is over 6 billion. So, you know, there's only 17% of the existing circulating supply out, according to CoinMarketCap at least. So there is going to be a lot of inflation on this. I imagine this is why this has been falling off the table since we did put in our all-time high at $28. Now, why I think this chart is so black and white bearish is, you know, you can only really call this somewhat bullish if you draw this to the candle body close down here, because you could argue that we are above the 786 Fibonacci, but we are below literally everything else. We're below the 200-day, we're below the 786, and this is personally the way that I would draw this macro Fibonacci from the low to the high. And you can see that we are currently, if I do zoom in, we are just below the 786 Fibonacci. I've been looking at this chart for the past couple of hours and we have kind of been stuck underneath this. So looking at what's going on, macro perspective, which is probably all I'm going to focus on for this video, we had a massive push up to the all-time high, came down, broke below the 786. That's your number one red flag that it's not looking too good. We had a dead cat bounce up to the 618 Fibonacci, the golden pocket, which is the number one important level. And we had this dead cat bounce up to the 618 and got a very, very strong rejection. So that's bearish flag number two. Number three, we've been stuck underneath this 786 Fibonacci level, had a dead cat bounce and fallen back below the 786 Fib. So there's a lot of red flags on this. Once again, the market cap is very, very high. And the chart just doesn't look too good, so I'm going to basically keep it at that. If you are looking for a moonshot on this, or you are looking for a tiny bit of hopium, keep your eyes on the 786. Like I said, I would be happy to switch my tone on this if we do have a very, very strong impulse from the 786 Fibonacci. But I don't think an impulse from the 786 Fibonacci is enough just by itself to have, you know, to argue that this is bullish. If you're wondering where the 786 Fibonacci is, if you're watching from a phone or something, the USD price is 656, which you can see we are currently just below it right now. So if I was personally looking to enter this, if you really were looking to enter this, like I said, personally I wouldn't touch this. I do think this is overvalued. I think the market cap is too high. Fully diluted market cap seems to be a bit of a joke to me, and the chart in the macro perspective looks absolutely diabolical. So that's just my perspective. If I was looking to enter this, which like I said I'm not, I'd need to see at least a strong impulse above the 786. A backtest to the 786, or necessarily doesn't have to backtest, but I would like to see a push above the 200-day moving average, which is round about 845 right now, and then an impulse off the 200-day. That would be enough for me to say, at least in the short to mid-term, this would start to lively up a bit. But like I said, I mean, the chart just doesn't look good to me. I mean, we've broken below the 786 multiple times. This is clearly a strong level of resistance. We came back up, had a dead cat bounce, got rejected from the 618 Fibonacci. Either way you draw it, from the candle body close or to the wick, it was a very, very strong rejection from the 618. So there's just a bunch of red flags for this. The chart doesn't look good. Broke below 786, dead cat bounce, rejected from the 618. Fell down the table, dead cat bounce, got rejected off the 200-day moving average twice now. So that's why I'm saying, even if we have a strong impulse above the 786 Fibonacci at the 656, 657, like we have had before, you know, we've had a big dead cat bounce 1, 2, 3, 4 times now. We've had a dead cat bounce, actually 5 if you're counting this. So we've had 5 dead cat bounces above the 786. They were all dead cat bounces and they all rolled over. You can see we've got a series of lower highs in this formation. So yeah, personally, I'm not a fan of this chart. Macro perspective doesn't look good. Micro perspective is slightly different. We have bottom down here, and at least if you draw the candle body close on the Fibonacci down here, I mean, we kind of held the 786, very 50-50 on it. We have held the 786 at least after we momentarily dip below it, but that's the only bullish thing I can see about this. We've held the 786 if you kind of cherry pick where you draw the Fibonacci to. So that's why I'm not a big fan of this. Like I said, I would switch my tone on this if we have a strong impulse above the 786 at the 658 region, have a strong impulse above the 200-day at 845, backtest it, and then we can start talking about targets of the 618 Fibonacci around the $11, which if we did take a trade from the 200-day moving average, it's a 33% trade. So like I said, market cap of this is pretty high. Fully diluted market cap is very high, so expect a lot of inflation. And like I said, macro chart just doesn't look good. Slice below 786, dead cat bounce, rejected from the 618, dead cat bounces, rejecting off the 200-day. So I'm not the biggest fan of this, and you know, that's okay. So this is all I'm seeing for Kadena, whatever you want to call it. Best of luck if you are holding it. Once again, none of this is financial advice. It's just my own opinion on the market. And you've always got to do what's best for you. Cowboy out. Peace.